Welcome, everybody, to another Market Conversations. I'm Jerry Hall. I'm your host. I'm here in Costa Rica. And tonight I got a great show lined up for you. I want to quickly go through who I see. I see Bitta in the stream. Hello, Bitta. Lori, James Rule, Bill. I have also, a little birdie told me that Digital Asset News, Rob, is going to be in the house tonight at some point. I think we've got a few folks chiming in from Arizona. So as people filter into the stream, I just want to take a minute and share with you some of my thoughts to set the context for the show tonight. And that is, I was talking with my son. My son's 22 years old, fighting fires in California, being a hero in a lot of ways. And he told me what he was doing with his 401k. Now, he just checked a couple of boxes. He says, Dad, I checked this one. It said it was a high growth fund. I said, okay, great. I said, what did you think that is? And he goes, they're investing in stocks that have a lot of growth. And that's good, right? And I said, growth is wonderful. The bottom line is, after this little 15-minute, he explained to me what his T. Rowe Price 401k was all about. I asked him to open up some of the pamphlets that he got on it. And we started walking through some of the actual costs and fees associated with having this wonderful retirement account. It didn't take very long before he could see that in the fine print, there were up to 6 different fees for his one 401k in these various funds that it was invested in. Now, these two gentlemen that I'm going to bring onto the screen here pretty soon, they come from iTrustCapital. And one of the things I really appreciated about my interview with Anthony from iTrustCapital, which you'll be able to find here on the channel, was the transparency in which these guys are operating, okay? They're in the retirement account space, but they're also in digital asset space, which presents a couple of very strong value propositions for each and every one of us, regardless of our age. Well, after talking to my son about his 401k, I told him about iTrust, and I said, I want you to consider stashing some extra money aside to a Roth IRA, working with instruments that allow you to compound interest, as well as take advantage of some very high capital appreciation elements. He's mulling it over, and we'll see if he'll pull the trigger. He's his own man. But the point is, there are opportunities that are presenting themselves in the marketplace today that were not available even a few short years ago. Let's talk about where the markets are, and then I'll bring the two men in. So, as I look at the equity markets, I see all-time high valuations. So where can these growth funds really go from here? I see real estate at all-time high valuations. I'm seeing the traditional fixed income space, which is generally bonds, at all-time low yields. We also got credit markets, which is one of the largest markets in the world, at all-time low spreads. Where is growth going to come from? Credit has fueled growth for the last 25 years in this country, and credit is getting harder and harder to come by. And the rates for this credit are going up. These are all things to think about as we have our money parked in these traditional capital market vehicles. So let me just bring in Anthony and Blake from iTrustCapital. Hey guys, how are you tonight?
Doing well. Thanks for having us, Jerry.
Yes.
No, it is. I'm a big fan. And again, I'll reference the hour-long interview that I had with Anthony, where we really got into kind of trying to get a context of where iTrustCapital is coming from and the suite of services that you offer. And so I want everybody in the stream to know, have the questions, put a Q or the word question. Brady will make sure it gets to me or the guests here. But while that's starting to occur, Blake, because I didn't have you on the show, I had Anthony. Why don't you give us just a quick insight to why you decided to dive into this industry? What background did you bring to it? And what's really fueled your oomph to make a business here?
Yeah, great question. Thank you. So I've been in the alternative asset space, primarily precious metals, for over a decade. Working with IRAs specifically, worked for a lot of companies. Anthony had some experience before too, and nobody got it right. There's no company out there that I would use personally that I would refer family and friends to. But the investments themselves are valid. Cryptocurrency, precious metals, and of course, investing through an IRA and getting all the tax benefits makes perfect sense if it's done correctly. And so I took my experience of IRAs and understanding that world and understanding precious metals and over the last few years, learning cryptocurrency and more and more and understanding the benefits there, and said, we've got to be able to do this better. So the goal here was to create a model, a platform that felt more like a traditional platform so that the masses will feel comfortable moving their assets onto it, opening accounts, making their own trades. So really from a user side, the goal was, let's make it feel like the Fidelities or the Vanguards or the Schwabs or the E-Trades, but the actual investment assets are alternative, cryptocurrency and precious metals at this time. Let's do it at low fees. Let's be transparent. Let's build a company with nobody on commission, no salespeople, so that when somebody calls in, they know that we have their best interests at heart. We're not trying to tell them to do something because we're thinking about a commission. And so far it's worked really well. Our business is growing rapidly. The amount of personal referrals from clients is growing month over month at a huge rate. And so it's proving the model of just build a really great product, have very aggressive, fair fees, and be transparent about it, and find a market where there's demand and a lack of a proper supply, in this case, product. And it turns out it works out pretty well.
Well, like I said, I'm very impressed with your platform. And I think one of the things that I have found the most interesting as I dove into like the research that I did prior to having Anthony on my interview program was just how unknowledgeable most of us are as it pertains to our own retirement plans. Like, case in point, you might have heard me off when you were backstage and I was talking about my son and the 401k that he started. I have a couple of private clients that I speak with that what they know for sure is that they contribute, they can see the deductions on their pay stubs, and they get a settlement, a statement every quarter that tells them how things are going. And when I dived in with some of these clients and I'm asking them, what's in there really? Most people really don't know. No. And one of the elements that I found to be the most shocking is that 85% of all retirement accounts are 90% filled with mutual funds. And mutual funds are notorious for having the most exorbitant fees of any other type investment asset, specifically for retirement. It is absolutely insane. Would either one of you like to speak to that issue? Because obviously you've done a lot more research on it than I have.
I mean, I'll touch on it and then let Anthony see if Anthony has anything. It to me comes down to choices. The average person doesn't want to have a lot of time to investigate and do tons of research. So they assume that this program that's, has the big letterhead of the big institution is going to take care of them and have their best interests. But the reality is it's a really basic model where they've got a handful of mutual funds. I've done it before. You probably have too. You sign up for the 401k because that's what you're supposed to do. Hopefully your company matches, which isn't the worst deal. But you just basically might as well throw a dart at which funds because you don't know really what's what. And that's it. You're locked in. You have no ability to really have a deep understanding. You have no ability to make changes. At least most plans, I mean, they might let you make a couple of changes a couple times a year, but you have very little visibility. And it's designed that way, right? They don't want you to really see behind the curtain. They want you just to blindly keep contributing, and they keep sucking their fees out, and they're very hidden. And so a lot of people think, well, I don't pay any fees. You do. Obviously we have fees. We're transparent about it. Sometimes people will question our account fee or our transaction fee. And they'll say, well, geez, I don't pay any of that with my current account. I said, no, you probably pay a lot more. You just don't even realize it. But putting the fees aside, it's just options. Basically, your mutual funds are going to be Wall Street products, stocks, bonds, and that's really it. So if you want exposure to digital assets, to alternative investments, you're just not going to get it there.
Well, we have a great question.
Yeah.
This coming in from Rob at Digital Asset News. What are some of the fee rates for mutual funds in a typical IRA? Anthony, you want to take this?
Yeah. So, I mean, it can be wide ranging, it depends on the fund structure. If you're paying 1%, you're typically getting a pretty spanking deal. And and it can be 1%, 2%, 3%. There's other administrative costs. They're always paying a fund manager who's typically extracting, millions of dollars per year in fees from you. And the bigger problem, which Blake alluded to, is that there's no transparency. What you're holding is a fund that the fees are being extracted on the backside. It's not coming out of a debit card. It's not coming out of the account directly. So it's almost like a slow, silent leak in your retirement money. And people never know. They just see it's underperforming. Whereas, with us, it's very transparent. You're holding physical assets. It's held in institutional custody with very low fees, no management fees. And so it's just a different ballgame. Mutual funds, they're the incumbents, right? And then we had index funds arise. And now, luckily you're able to invest directly into these digital assets, which are, pseudo equity tranches of these platforms.
Right. Well, here's another one of these wonderful elements of iTrustCapital. And that was, when I was looking into it, the ability to maneuver while I'm inside the account. Because a lot of retirement accounts, honestly, they are difficult to change or trade. As a matter of fact, if the custodian or administrator of the quote unquote 401k, you generally only have access to what they provide for you. In their what they provide is very limited. Now, Rob goes on to ask another question. Also, don't forget to talk about crypto trading in iTrust IRA that we can do 24/7, 365. Now, what this is telling me is that if I've taken a position in Bitcoin and I have Bitcoin in my iTrustCapital Roth IRA, and I see the market sentiment swinging and I want to trade that Bitcoin for, let's say, XRP, I have the freedom in the account to do so. I don't need a human resources person or an administrator of the account to give me permission. I have full control to self-direct within the account. Who would like to speak to that? What a wonderful element that is.
Yeah, Jerry, that's one of the key secrets to IRAs that people don't realize is that you are allowed to transact as much as you want within an IRA without a taxable event. And so let's kind of hone in on that, because most people, once that clicks, their minds are blown. So you buy Bitcoin on a Coinbase, on a Binance, whatever exchange, it doubled, you sell it, great. You did a nice job. You made a nice gain. You now owe capital gains on that one transaction's gain. Short-term capital gains is just like income tax, state and federal. Long-term, it's a little less, at least for now. We'll see how that goes. But you're required to track, report, and every time you sell and you have a gain, or in crypto's case, if you swap and have a gain, taxable event. So what we say is, hey, just at least do as much as you can within an IRA. And any kind of an IRA, you could have the ability to buy and sell within the account and have no taxable event. Obviously, the Roth gives you the benefit of withdrawals with no taxes. But here's what's something to think about over the course of many years, right? These accounts are set up to build wealth for a long time. So it's speaking to your son who's 22. Man, I wish I would have opened up a Roth when I was 22 years old, because I'd have almost 20 years now of compounding gains plus another 20 years to go. So it's not the only way to invest for your son, but it definitely should be trying to put as much as you can in there. And how much can he have from 22 to 59 and a half, and then have it all be tax-free at distribution, and wait even longer than that. So it's just a massive benefit. And with our platform, we really took advantage of that key benefit that yes, moving a mutual fund and mutual fund in a 401k is not taxable either, but it's a big pain and most people aren't going to do it. We've made it so simple that anyone can log in and simply click buy, serves up a price, execute a trade within seconds, 24/7, which is what Rob was talking about. So we are, if the market is open, we're open 7 days a week. We're not confined to just stock trading hours. And some people are very active in trading. They buy and sell regularly. The volatility, obviously, if you have some idea of what you're doing, can be very beneficial. Others just buy and hold, and that's okay too. But the ability to get in and out of positions in an IRA without the IRS having anything to do with it is just a massive benefit.
Yeah. And then it's worth mentioning that, probably a lot of listeners, if you were involved in 2017, right, we went into a large parabolic growth. And I mean, I know myself and many other investors who were afraid of selling certain positions because, oh man, I got to give 40% to the feds and maybe another 10 to 15% to California. And you should never be worried or scared to sell an investment that maybe should be sold just because of taxes. And so that will give you the ability, when it's in an IRA, you never have that worry in the back of your head that, hey, I have life-changing money or this is an amazing trade. Just liquidate it. No taxes to worry about. And not having to factor in taxes when you're making changes to your portfolio, doing risk management is invaluable.
Absolutely. Well, hey, I got a question for you here, Anthony. Anthony, you mentioned in an earlier interview that you were planning on declaring early retirement in order to withdraw penalty free before 59.5. Can you elaborate on that?
Yeah. And so this is, you can find a lot of good information online, but to make a long story short, you are allowed in the US to declare early retirement and start drawing from your retirement accounts. It doesn't mean you have to stop working. You can still work. It does mean that you can no longer contribute to retirement accounts. It does also mean that you need to continuously draw from them. And it's a conversation you should be having with a financial planner or tax professional, because when you're filing for early retirement, it's no small thing. But it's entirely possible if the numbers make sense. It would just sit down with a tax professional. They can go over it, and you can find a lot of good information online as well.
Well, I think that's wonderful that people should know that. One of the other I thought this was excellent. I like to crunch numbers. I like to look at real things. I'm a very tangible guy. This means this. Okay, math is math. When I started really comparing crypto exchanges and the cost to transact within them, so what they call exchange fees, right? The average exchange fee is 1.5%. Now, one of the interesting elements that iTrustCapital brings to the table is that the trading fees within the account are a flat 1%. That's 66% of the average of the rest of the market. It's like gravy or an extra bonus. Who decided that? Because that was an internal thing that the Brain Trust came together and said, okay, when we set up our structure, we want to provide this. Were you aware of the industry average when you made that?
Yeah, Jerry, we were, but let me blow your mind. Our industry is a little different than an exchange, right? Coinbase, Binance, various exchanges are not our competition. There are other IRA companies in the space. Not many are left. Kingdom Trust has a pseudo product, Bitcoin IRA, Bit IRA. We love it when clients say they've already talked to them because it's a slam dunk, easy client to get started with. Tons of them that have maybe gone with them in the past have moved their accounts to us most of the time in kind, so they don't even have to liquidate their investments. But the competition isn't 1 to 1.5, 1 3/4, 2. We're at 1%, and our competition wants to charge on the low end 7.5% up to 12.5%. And before we came along, they were just fine charging 15% transaction fees. They had no problem doing it, plus higher monthly custodial fees. Yeah. Now, we've obviously disrupted the industry quite a bit, and most of the companies that were still trying to hang on, they've folded up. They might still, their websites might pop up, but they're not doing any business. The only real company doing it is Bitcoin IRA. They do have a platform. I'll argue ours is better, of course. I'm a bit biased there. But their fees are up to 12.5%, whereas we're 1%. So why did we do it? We could have probably come in at 4 or 5% and done quite well because, hey, we're better than the competition. But the goal was to not figure out how much money can we make on each person. The goal is actually figuring out how we can make the least amount on each person, because the better product we deliver and the lower fees, the more excited, the happier clients are, the better the experience. And quite frankly, the more business they want to do, the more they'll be open to trading because the fees aren't outrageous. The more family and friends they're going to refer. And it's actually a quote from Jeff Bezos, whether you like him or not, he's the richest man in the world for a reason. And that's a quote from him is when you open a business, you do one of two things. You either go and try to make the absolute most you can on every client, or you try to make the least. And if you're somewhere in the middle, you're in dead man's land, your business is going to fail. So we went for let's try to make the least amount. And over time, we'll try to keep driving down the fees. In fact, we have a couple of exchanges that we expect to go live as part of a plugin, right? So we're a platform. We plug in all these other product exchanges. We're not sitting back with where we're at. We're bringing on one very soon, and then hopefully another one Q1 to Q2 of next year. And the goal is create competition, a smart routing system, so we can deliver the best price to our clients. Obviously, also to have redundancy and deeper liquidity is not a bad idea either. But it's to enhance the product to our clients and give them the best possible product we can.
No, and I think that's wonderful. I'll tell you what, I saw a question up here, and I think this is appropriate for you, Blake. Is the contribution limit for the Roth IRA with iTrustCapital the same as the traditional Roth IRAs? So contribution limits per year.
Yeah. So let's make it real simple. So an IRA is an IRA in terms of contribution. So if you're under the age of 50, you can do $6,000 per year. If you're over 50, you can do $7,000, period. And that's collective. So you can have, a traditional and a Roth, but you can't do 6 and 6. You could do 3 and 3 or whatnot. So you're capped out at $6,000 as a contribution of new money, meaning this money's not been in a retirement plan. It's not in an IRA, a 401k. So those are pretty hard numbers. There's no flexibility there. Now, one thing that people should know is an existing IRA can be transferred at any time, no matter how much. There's no restrictions. That has no bearing on the contribution amounts. You mentioned 401ks. If you have an old 401k, an old 403b from a past job, one would be able to roll that over into an IRA regardless of amount. And if it's a traditional, no taxes, we can maybe talk about conversions into Roth, a little bit different topic. But there's many ways to fund an IRA, and there's just about everybody in the U.S. Can. And if you are investing, you really, regardless of the investment, put aside crypto or gold. You really it's just, you can investing 101, max out your IRAs and make your investments before you use additional money. The payoff, it's too good to pass up.
Yeah, when you run the numbers, right, it is almost irresponsible to not be in one of these products. I mean, really, I'm not a big salesman. I don't have a lot of people on my show where I do my pom-poms, but I've had two. I have two relationships with companies. One is TaxBit and the other is you guys.
Yeah. And
it's because I believe in you. You know what I mean? What you're doing is providing a wonderful thing. Let's transition from the wonders that is iTrustCapital, and let's talk about clients onboarding, because a lot of folks, and when we already kind of set this table, they're not really hip to what these things really, really, really are. So walk me through a typical onboarding of a client who's been working, has a 401k, and wants to roll it into an iTrustCapital Roth IRA. Okay. Now, keep in mind, they had mutual funds in there. You guys don't handle mutual funds. So what is that conversion like? And do you have a team that onboards people? Do you have a customer service squad that is there to walk us through this and kind of hold our hands? Because a lot of us don't know all the ins and outs.
We do. Again, we have no salespeople, but we have staff, and everybody's very competent. They're warriors. I mean, they're putting in 12 to sometimes 15, 16-hour days to keep up with the flow of new business. And we recommend and are very open to people wanting to schedule calls with us. A lot of times it'll be myself and Anthony for new people. Then we have others that just help with the processing. But a couple of things to point out: a 401k, if it's a current 401k, you're still there and you're under the age of 59 and a half, which most probably will be, you might have hit a roadblock right there. So typically you're not allowed to roll those over, with some exceptions. There's a way to check, but most of the time, no. But if you've left a job for any reason, you absolutely 100% have the ability to do a rollover. So we would set up a new account, and we've got this streamlined really, really well. So you go to our site, create an account, you log in, and you can get through an application all in one place in about 5 minutes. You submit that information to us, we review it, send out all the forms to DocuSign. We can get all of this done in 1 to 2 days. You click through to DocuSign, you've just opened up a new IRA. And here's where the old legacy system comes into play. So we then provide funding instructions to our clients. They'll contact the plan administrator, assuming they have eligibility, and they'll initiate the rollover. And you're going to love this one, Jerry. They'll do the rollover by mailing a physical check by regular mail. That's the only option, even the big boys.
Okay.
A lot of times that check has to go to the client first. The client then has to forward it to the trust company. So we'll get our part done in a day. That part, 2, 3, sometimes 4 weeks before those funds are available in that client's account. So it's not hard. It does take some time on 401ks. IRA to IRA is a little bit faster. Typically, the same companies that mail checks, for whatever reason, they'll do a wire if it's an IRA. But there's a lot of disruption and enhancements needed in the moving of money from custodian to custodian. And I'm pretty sure we're investing in projects that are
word on the street word on the street is there are technologies now that are working their way into capital markets and other financial businesses that do make the value transmission similar to email. In other words, boom. It's just a rumor.
Well,
I can't confirm.
Heard some about that.
I think, yeah. Well, what's funny is they could easily incorporate, but that's not the point. They could easily do wires. They could easily allow a client to pay to overnight a check, but they don't give the option. It's because they want to capture and hold on. And if you dare want to move your money away from them, it's going to be painful. They want to try to make it as painful as possible. So our job is to make it as seamless. Our staff will assist. And I think, if you read through our reviews, our clients are very happy with the way that we've got it set up. And it's as efficient as it can be to get it done.
Okay, last question as it pertains to those folks. So, in this COVID environment with people losing jobs, but looking for new jobs, it would seem that would be kind of a target-rich environment. I wanted to ask you, so let's say I'm one of these people where my old employer and my old 401k plan, I'm not with them. I want to roll it into with you guys. Now I get a new job and they have options. How easy is it to plug iTrustCapital into the new company that I'm going to start working for that wants me to participate in a retirement account? Are there optionality for iTrust to work with my new employer? Or is it always going to be my own individual account that nobody else has anything to do with?
The IRA, everything has to be an IRA. Would we love to be able to do that and tap the $8 trillion employer plan market? Absolutely. The big banks and institutions that have a stronghold, do you think they're going to just welcome us with open arms? No, because that's, that
probably not.
Probably not. But unfortunately, no, you can't attach the 401k. So some people, but you could do both, meaning even if you want to contribute to the 401k, again, maybe you get a match, you could max out your 401k contributions in a year and still max out an IRA contribution. You're allowed to do both. If for some people, funds maybe aren't, they don't have that much to invest, they might make the decision to not do the 401k or to do less, and then simultaneously let's do an IRA outside for diversification, and if they want access to the investments we offer.
Yeah, that's what I always say. I mean, if someone, they say, oh, I got this new job, the employer is offering this plan, want to bring it to iTrustCapital. 401ks and IRAs are just distinctly separate. So if you're still employed, if you want to contribute to that, that's great. You should. If you can max it out, you should. But at the same time, you can always open an IRA. It's not even related to your employer. This is something you do. It's an individual retirement account. And you can get started. So from a tax planning perspective, it's if you can max them out both, you usually should, and they both have their own.
Excellent. Well, we got another great
per year.
Question from the live stream here. What about rolling everything you have in cold storage to iTrust? Is that an option? I'm not able to move my 401k. I tried already.
And then you want to take this one. This is the number one question we get asked every day.
Yeah. Yeah. And so, we wish you could, right? When you look at the United States government and how the IRS has the rules set up, when you contribute to an IRA, it has to be in US dollars, right? And that's how they keep the stronghold on the dollar. If you have to use it as a medium of exchange, right? If you have to use it as a medium exchange, it allows the dollar to, continue to be relevant. I can only, and hopefully things will change. I can only imagine if you could fund IRAs with your crypto, we would probably have to hire everyone listening to come join the company, because it would be an unstoppable flood, and the government would never get tax money ever again.
So so let's say I had a Bitcoin, and that's my total digital asset investment. And I really like Bitcoin. I think it's got a huge future to it. What I would have to do is sell my Bitcoin for US dollars, take 6,000 of it, move it over to iTrust, buy $6,000 worth of Bitcoin, and wait till next year till my $6,000 window opens up.
If you're not still contributing to digital assets. So, I mean, for me personally, I hold my crypto, some of it outside of a retirement account, and I have some inside of a retirement account.
Okay.
And so I'm still accumulating, right? And
is
so
it an iTrustCapital account?
Of course.
Okay.
Yes.
Well, just checking. I saw Blake raise an eyebrow over there.
And what you want to do?
He only has one. I have two. That's
yeah. But so you want to hold some. If you're already holding some, you don't necessarily want to sell it, right? If you're still accumulating, or if you have fiat burning a hole in your bank account, you can have both. And from a tax planning perspective, having tax-free crypto and then taxable crypto, it could be a good plan to have both in your portfolio as well.
Let me chime in on that, Jerry. So I'll give some people an idea. For some people, it might make sense to do that liquidation. It might not. Maybe you just bite the bullet. If you have gains, you pay some taxes. But here's where it absolutely makes sense to do that. If you are in a position on any of your crypto where you're actually at a loss, if you were to sell, take the loss, right? Sell, because you could book a loss, just like you have to pay gains against future gains indefinitely. So if you bought Bitcoin, let's say back in the peak at like 20,000, and you sell it today, what did we close? 13, and you lost 7,000. Probably you just want to sell just enough to fund the IRA. Let's call it 6 or 7, depending on age. But if you're booking a loss, that's not the worst thing, because you're going to immediately take those funds, put it into an IRA, buy the exact same position. So you really didn't take a loss. You have the same amount of Bitcoin. You just now have to move some into the IRA, and that $2,000 loss, call it. Even if you don't have any capital gains this year because you didn't sell anything else, you're just holding, you could push a loss forward on your taxes forever until it's a credit indefinitely. So in 3 years, if you made $50,000 and now you're taking those gains, you've got that credit waiting for you to at least offset some of it.
Right.
So
no, we went over that with the tax bit guys, and I thought that was fascinating. So
Tax loss harvesting, I believe they call it.
Yes, that's exactly the terminology he used. So I got a very good understanding. I think the audience has a very good understanding. You're both very articulate. Let's bring in our very own investor from the street, the young and wonderful Bitrue Av. Hey, Bitrue.
Hi, everybody. Happy Friday.
Thanks.
Happy Friday. So what kind of questions do you have for our two retirement account experts?
Well, actually, I was glad somebody asked a question. One of my questions was, can I roll my actual holding into it? So now that I know, I can't. So I have a few questions that they might be a little specific. So I don't know if it will help anybody. As far as the one thing that I'm very interested in is in the Roth where you can trade. Is there a limit to how many trades you can make? If you put in $6,000 and you start trading, like how does that work?
No limits. You can have whatever you decide to do. So that's the beauty of the IRA. It's everything you do within this account is tax sheltered. And with our platform, I don't know that people are necessarily day trading. I don't know that it's built perfectly for that. And that's a whole nother skill set one would have to have. But certainly swing trading, because like we've just seen some huge movements. A lot of people after what we just saw took some profits. It's up to the individual. But yeah, there's absolutely no limits on how many trades you can make daily, yearly within these accounts.
All right, awesome. And can you use your gains to pay for the fees and for your monthly and everything like that?
So we are set up so when you create an account, you put a credit card or debit card on file for just the monthly, which is the $29.95, covers all the storage and everything else. You actually don't want that fee inside your Roth because it's hard to get money into a Roth IRA. You've got to pay the taxes first and then put it in. So you want to try to avoid as much of the fees. So that fee comes from outside. Trade fees do come out of the trade. So the 1%, you do $100 trade, $1 comes out of that.
Okay. All right. And then, okay, so that's already been answered. Do you guys use a certain platform for trading as far as is there charts, actual technical charts that you guys use? Like, how does that work?
No.
One of you guys want to bring up your screen? We can do a screen share and show the world what the incredible iTrustCapital platform looks like.
Yeah, and just for anyone listening, you can always head to iTrustCapital.com and put in an email and a password, and you'll have an account. It doesn't cost you any money. And just to answer your question, Bitrue, no, it's just
use the link in the description of this video, folks.
Yes, don't go to iTrustCapital.com. Click the link in the description.
The link because you're helping to create financial literacy content so that everybody can utilize this information. Go ahead, Anthony.
Yeah.
Sorry.
No, yeah, that was right. I should have pulled that. But no, so it is designed to be very similar to Coinbase. So you're buying at market, you're selling at market. And so when I do talk to some of our more active traders, they usually will keep TradingView up in a second tab. Do they do their technical analysis on TradingView, which I suggest everyone check out TradingView. It's a great tool. And then they'll just switch tabs, buy or sell on our platform. We are, internal on the product team. We are developing premium features that should be rolling out early next year, but I don't think we can leak those today, right, Blake?
No, we like to say hush hush until it's imminent. But it's really great. A lot of clients have bought their first Bitcoin or cryptocurrency on our platform. They've done the research. I've heard it time and time again where they're not the techiest of people, so they've done all this. They want to invest, and then they are so intimidated by the process to generally invest in crypto. And I talked to somebody recently who bought a Nano, which is a fine product, and has had it for months and is scared out of their mind to actually move the crypto from that wallet to the Nano and do everything correctly. It scares a lot of people, and so what we built is more of a mass market where simply as a user, all you ever have to do is create the account, set it up, get it funded, log in, view your account, your values in real time, make your trades when you choose to, and log out. And that is it. So we're going for a real simple model, which in my opinion is how you grow and scale to the masses.
Well, and it harkens to this specific statement by Channing. Channing says, so if we make a nice sum from our investments, it seems like we should open an iTrust account to prevent huge taxing. And what I would answer before I give it to the professionals is, Channing, you can realize your gains inside of the iTrustCapital account. You don't have to get your gains outside, pay tax on that before you move it into one of these shelters. Think of a Roth IRA as a shelter, and they are sheltering you from the evil taxation guy. Some people call it the IRS. It's an illegal vehicle used by the wealthy for the last, 45 years since that senator created it. It has been a way to shelter money from taxation. So why not put your $6,000 a US in the account every year, trade within the account, and allow those gains to stay in there, sheltered from the IRS? That's the beauty of this mechanism. I mean, am I missing something, fellas?
I think you nailed it, Jerry. And just to give a little perspective, there's $9 trillion in IRAs in the US for a reason. I mean, obviously, a very small amount is in crypto. Anthony and I are going to change that. But there's no question an IRA is not an investment. It's a vehicle. Use this vehicle to make your investments, and you're going to keep more of your money. That's really all it comes down to. So yeah, you mentioned something similar, and I smiled. And here's why I smiled, Jerry, because I use this phrase all the time. You are doing yourself a disservice if you're not maxing out, especially a Roth IRA, if you're eligible. I don't care what you're investing in. I don't care if you use iTrustCapital. If you're making an investment and you're not maxing out your IRA first, you're shooting yourself in the foot, because all it means is you're going to keep a lot less of your gains. So for most people, you should be maxing out your tax advantage accounts. If you have more money than that to invest on a yearly basis, then sure, you're going to go make investments outside, because those are your options. But this is a gift. I mean, especially a Roth IRA. So the IRA originated in the 70s. Private pensions were going away because companies can't afford private pensions. And so Social Security was clear. People were not going to be able to retire on Social Security. So they came up with this idea of, hey, start putting your money away. We're going to give you an incentive to save through these vehicles. If you save and don't touch this money in terms of taking it out for distributions until that 59 and a half, we're going to make the money all tax deferred. That was in the 70s. It wasn't until, I believe, 97 that the Roth came to be, which is a game changer once you understand it. And for somebody, younger, newer to investing, you've got time on your side. Have you heard the phrase compounding interest ever? Does that come up?
Right.
So this
Definitely.
is compounding gains. So the earlier you get started in investing in general, so I commend you for doing it now and putting it into vehicles that you don't pay taxes. Now, whether you decide to trade actively or not, instead of every time you sell for a profit, you're going to peel off a portion of that every year to the IRS. Those gains just keep rolling over to the next year and the next year. And in, 30 years, I'm not sure your age, but whatever that is, you're going to have a heck of a lot more in that bucket than you will in the bucket that you've been paying taxes out of every year.
Yeah, and that's not including things like, sorry to interrupt. It's just it's not including things like staking and lending, right? Now, if you're holding, say, Ethereum and we're moving to proof of stake, that's going to probably be generating, 4 to 6% or higher year over year. Imagine holding your Ether in the proof of stake system and not having any taxes on it, right? Or lending, right? We're going to offer lending in the future. Say you're earning 8% on your Bitcoin. You don't have to pay any taxes as that. So not only is your native Bitcoin value probably compounding as it goes up in price, your staking or lending yield is also tax-free. And so this is something that everyone should have, and it's not yet utilized all the way by new crypto investors because they don't really know it exists. So if a lot of you are learning it now, you make sure you educate other people, because Roth IRAs are essentially our own little, hedge fund, venture capital, tax efficient structure that typically only the rich have had access to, tax-free investing. And everyone in America can have their own tax-free structure.
I did not know you can stake through that.
Well, let's make public.
Well, Anthony, clarify though, that's coming, not available yet.
Yeah,
exactly.
Ethereum's not in proof of stake yet either. Sorry. Yeah, no, it's this is the long-term vision, right? We're gonna, if you see anything in the crypto space that you feel is attractive, you see decentralized finance, you see staking, you see lending, these are things we will be integrating into our platform from a product perspective over the long term, for sure. And it'll all be tax-free, right? And so you're positioning yourself for that future growth, whereas paying taxes even on the your BlockFi, your Celsius, that's no fun, right?
Right. So, let's talk about what assets you do have. What does iTrustCapital currently have in their suite of products for investors? You talked about crypto and precious metals. Who wants to be specific on exactly which precious metals and which form and what digital assets?
Anthony, why don't you take the digital? I'll jump in on the gold and explain them.
Yeah, that's what I was going to say. Yeah, so right now, Bitcoin Cash, Ethereum, Litecoin, EOS, and a lot of people's favorite here is XRP. And we have Chainlink as well as Stellar to be launched very soon. Early in Q1, we'll be allowing you to access a lot of the exciting open finance, decentralized finance protocols. Can't name them yet, but the world of Aave and synthetics and Yearn, Wi-Fi and all that, very exciting. We're hoping to support those. And then a little bit later, right, supporting new native blockchains, to name a few. There's a lot of our clients are excited about Polkadot or Cardano. And so we're working closely with Curve, our custodian, to be able to integrate a lot of exciting things next year. I can say we'll never be as fast as a Coinbase or a Binance, because these are retirement accounts, we move a little slower. We have to make sure all the audits are done, all the security on the backside is done. But a lot of exciting things to come. And Chainlink and Stellar, it's very soon. And then Blake will tell you about the precious metal side. We got something coming in soon too.
Well, let's dive into that, Blake. I get all excited when people start talking to me about precious metals. So
yeah, and that's my background. So this is the best product, and it wasn't. They didn't realize when it was built that it was designed for IRAs, but it's perfect. So one of the downside to physical metals is efficiency. It's slow to buy, it's slow to sell. Fees can get up there, especially recently with premiums. So there are precious metals IRA companies that have no technology. It's like you go in a time warp back into like the 80s or 90s. You're on the phone with a guy, he's hawking some coins, it's going to get shipped to a depository. You have no idea what the value is. You want to sell, it's going to take you weeks. So throw that out the window. And we partnered and are working with Kitco. So Kitco is one of the largest precious metals dealers in the world. They are by far, no question, the largest precious metals media outlet in the world. Kitco News, if you follow metals, is all over the place. So what they've integrated with a company called Tradewind, which is a software company for financial platforms, is taking physical institutional gold and silver bars. So 400-ounce gold bars, 1,000-ounce silver bars stored at the Royal Canadian Mint, guaranteed by the Canadian government, and all of it is ledgered on a blockchain. So what does this allow? Well, this allows you to go on our platform, because we've integrated this, and buy and sell physical gold. Silver's not available yet, but imminent. I'm comfortable saying imminent, like next week imminent.
Okay.
So from the same dashboard that you're buying Bitcoin and the others, you can just click and buy true physical ownership of gold and silver at the lowest cost in the entire country, $50 over spot per ounce on gold. Silver will be $2.50 over spot. You don't have to buy full ounces. You can buy, I believe it's 3 decimals to the right. So for those who want the added protection of physical gold, in their IRAs, this is perfect because you're not allowed to hold it anyways. It has to be custodied.
Let me jump in real quick, because the one thing that I know is a big part of that market that I didn't hear you talk about or say anything about is cost to carry. So what is, I know vaults cost money, and there's usually always a storage fee or a custodian fee or some fee that directly is going to where it is housed. What are we talking about for this product that you're offering on iTrust?
That's the best news of all.
Yeah. So from day one, our monthly fee, account fee for storage of crypto and all the reporting necessary for the account is $29.95 flat for any account of any size, 1,000, 5,000, 1,000,000, anything. So the fee structure with the metals is still just $29.95. So there are hard costs, as you mentioned, Jerry. There's no way around it. There's hard costs for storage of physical metals. So gold launched a few months ago. We were able to, even at $50 over spot and paying Kitco, right? They have to make some revenue.
Right.
We can absorb the storage fee and still have the lowest cost in the entire country. Silver, I challenge anyone to find physical silver at $2.50 over spot. And again, much higher cost for silver because of the volume, right? To give a little perspective, $1 million of gold will fit in a shoebox. $1 million of silver will take a pallet, right? So that actually is a higher cost, and that's why silver got delayed a little bit. We had to work with Kitco and the RCM to get it done, but we're able to offer it at that price without having to raise storage, and that's lifetime storage. So for somebody who's just going to buy and sit on it for 10 years, there's no added fees.
Well, for those of us that have an understanding of that market, and I'm not an expert like you, Blake, I'm not, but I do understand the value in precious metals is the physical metal, not some paper derivative thereof, not some rehypothecation vehicle. All right. So it is in the physical metal. So that's what you're offering. A mutable ownership on the blockchain.
Correct.
Oh my gosh. So Anthony and I cannot own the same ounce of gold.
That's correct.
Well,
and it's audited, audited on a regular basis market as well. Yeah.
Yeah. I mean, you can't swing a dead cat in the traditional gold market without hitting somebody that owns the same ounce of gold you own.
Oh yeah, that's the problem with older databases and a lot of.
Exactly.
I mean, if you look at some of these ETFs, they're still utilizing paper to track a lot of ownership. Not all of them. They're either using very older databases if they're more advanced, or sometimes literally paper to transfer ownership. And so now when ownership is being transferred on a blockchain, we all know the redundancies in place. So it's just next generation.
That is incredible. Quick, Marcos. Yes. Did they say eventually there will be staking, etc., within the iTrust Roth IRA? As a matter of fact, if they say they have EOS on their platform now, EOS, a proof of stake protocol, is that staking on iTrust?
Good question. No. So while we would love to support it, EOS itself, into my knowledge, I stopped kind of keeping close tabs on the ecosystem a few years ago. But anyway, because it's a delegated proof of stake model, and the way their consensus mechanism is set up where there's no fees to transact on it, I don't believe it has any active yield. Whereas, Ethereum, you're expected to have 4 to 8% yield. As of right now, I believe it's almost zero yield on EOS. Nothing wrong with that.
It's
yeah, nothing wrong with that. It's just used to secure the network but not to enrich the holders.
Gotcha. Well, thank you for answering that. Bitta, let's go back to you. What else is on that notepad, young lady?
I am stunned right now. I've received so much information. I'm just trying to process it. But another question I have is how many Roth IRA or how many account kind of one person have? Are you only allowed one per person?
Good question.
No, you could have as many as you want. You just can't. You're limited on contributions. But so hypothetically, this is purely hypothetical. Be it you contribute for a few years on an iTrust account, and God willing, it goes up by many multiples. Well, you're not stuck or having to stay in one, meaning you can open up another one at another company that maybe offers different investments if you want to diversify now that you've had your wealth has grown. So you could do partial transfers anytime you want. There's no restrictions. There's no penalties. Open it up at 10 different companies if you choose to, and break it up. The only restriction ever is just how much you can put into an IRA on a yearly basis.
Okay. And if you have gains, like major gains, and your retirement age is not there yet, are you, like, let's say I contributed the 6,000 for 2-3 years, and then Bitcoin takes off, and now I have thousands in there, and I want to use the gains. How does that work when you're trying to withdraw within the 5-year or 10-year, before you are 59 or whatever it is that you need to be?
So you've got a couple advantages with a Roth over any other IRA. You are allowed at any time to take out your principal. So if you do 3 years, 6,000, that's 18,000. Age is irrelevant. Always can take out that 18,000. Now, if you do take out your gains, this is the catch, and this is the deal that you've made with the government is, hey, we're going to let you have this account with all these great tax benefits, but you need to hold on to onto the gains and not withdraw them as a distribution until 59 and a half. So if you do take it out early, there's a 10% penalty, and it is taxed as income. So you want to try not to do that, unless it's necessary, or if you've made so much money that it doesn't matter, I guess, you might take some out.
Yeah, and I will say that, and again, this when it gets into tax planning, you do want to work with your financial planner or a tax professional. But with Roths, in addition to being able to take out the principal at any time, you can also, there's a few exclusions. So one is a first home purchase. Now you have to look this up. It's nuanced, but you can withdraw the profits for your first home purchase. Advanced education, you can withdraw some of the profits for advanced education. Even in some cases for medical expenses, which we hope is not the case. But if you do want to take out some of the profits, there can be ways if you meet a few of those exclusions. So maybe buying a house for yourself if it's your first house. But again, you can find a lot of these online, and ultimately you'd want to talk to a tax professional.
Okay.
Right on. Well, I'm going to step in here real quick. I want to thank Anthony for his time. Anthony, folks, has a heart out, which in the radio biz or TV biz means there is nothing in the world that can keep him here beyond now. He's got to go. So, Anthony, thank you so much for your time. Thank you for wrangling in Blake. And, young man, we'll talk soon, I'm sure.
Yes. Thank you very much, Terry. It was great chatting with everyone, and you have a wonderful day.
Right on. Bye-bye, Anthony. So, Blake, we got a minute or two left with you. I always do this thing at the end of the show where I just, allow you to just your final thoughts. What are you thinking about in the crypto space or the gold space or even the social media space? What do you want to impart upon the audience before we bid you a farewell?
I guess that's scary a little bit here. I got to be careful what I say, not to upset anyone. But I think really, given where we're at in the world economically, where the Fed is, they're backed in a corner. There is no way out. So I just want people to really think about their personal financial situation, where they're at. We're past the point of, well, I wonder what's going to happen. We know what's going to happen. There's going to be mass money printing at a scale that the history has never seen, at least in this country, for sure. And there's consequences to that. But there's also can be benefits from that too, if you make the right kinds of investments. So I tell everyone to learn more about money. You see a book right behind me, this side, The Creature from Jekyll Island. Understand a little bit of history about the Fed and what they're actually about. They're not about protecting savings. They're actually designed and have a mandate to create inflation, to devalue the dollar. And now they're going to do it on a scale that we've never seen. So be sure to be positioned before the cliff comes. It's really not hard to see at this point. They have no options. Interest rates are going to keep going down. They're going to go negative. and dollars are going to be created, trillions. It's just going to keep going, right? I think this year debt is 3 times GDP already, if I'm not mistaken, and there's no end in sight. So study, learn, read history. It does repeat itself. It looks a little different this time, but it's the same core problems that we were faced with many times throughout our country's history.
Well, I am so very, very eloquently said. The whole purpose of my channel is to bring about financial literacy. And there is no financial literacy without understanding the history of money, monetary policy, what we would call behavioral economics, game theory, and understanding human behavior, right? These are all things that we put into a pot here on this channel. We mix it up and we try to make it digestible for the common person, because as you know, and I know, they don't teach these things in school. You do not get financial literacy in the public school system, or even to a large degree, the university system. And exactly by design. However, with the advent of the internet, and all I need is a camera and an internet connection, and I can create a show where I can learn and then disperse what I learned to others. And if we can permeate that, get a little Metcalfe's law going, we're all going to do better. So Blake, I commend you for what you do at iTrust and your willingness to come on the show and engage with this incredible audience. So I want to thank you very much and wish you nothing but the best going forward.
Jerry, thank you for having me. This hour flew by. It was quite enjoyable.
Well, we'll have you back on in a quarter or so.
Sounds good.
Get you back in a couple of months. We'll get you back on in 2021 and check in with your progress and talk about the new things that you got going. I'm a supporter. Folks, I don't support stuff I don't believe in. Their link to their site is in my description. There's a utility link. I get a little piece of this. It'll go towards creating financial literacy programs for your children. So let's build that little pot so that we get money monkeys out to all the kids and they can learn all the things we didn't learn that we're having to learn now in our adult life. So Blake, thanks. Take care. And we'll see you on the later. Bitta, what an incredible couple of guys in an incredible company with iTrust. What do you think?
That was very exciting. I actually learned a lot more than I anticipated. I kind of was like, yeah, I was so, excited about it. I've been waiting for it. But now that, the fact that there's going to be staking in the future and all like the gold on the blockchain, everything is just, I haven't quite taken it in yet. I'm so excited right now.
Well, truth be told, I agree with you. There's a lot to take in. We are entering a paradigm in capital markets that's never been seen before. All right. Never have you been able to purchase an asset that has such a monstrous capital appreciation value proposition and have it reward you, not in the form of dollars paid for interest, but in the actual underlying asset.
Right.
At above what you could get in our existing, what we would call fixed income markets. So bonds can't touch the rate of returns on these things. 4%, 5% a year, that might not seem like a whole lot, but when your 30-year bond is only producing you 0.75% yield, trust me, 4% is attractive. And it's not paid in US dollars. It's being paid in the underlying asset. So as it appreciates in capital, it's a double win, and you can get the tax-free advantage by just doing some work up front. Start your account, fund it with cash, trade within the account, and let it grow. And for a person of your age, in your situation, I think Blake made a good point. It's almost irresponsible for you not to be funding your Roth IRA before you do anything else. It should be the first thing you do. And then the other stuff you do.
And you know what? It's we're only like a little over a couple of months away from a new year, so I need to get on it and get this year's contribution in, and then I'll have a little bit of time to get next year contribution. So I guess it's like perfect time now that I know how to trade. It's even more exciting because I actually am, trading and making money.
Exactly.
On a positive already. So now that I'm doing it with, without having to pay for tax for it.
Exactly. And it doesn't need to be mutually exclusive. You can have
Beautiful.
your Roth IRA with iTrust set up as your retirement. And you can have a trading account on the side that if you make some money and you want to buy a new pair of shoes or buy something nice for the baby, it's not one or the other. The truth is you can have it all, right? So
Very cool.
Final thoughts, and then I'm going to bring in Brady and put you in the green room.
Well, my final thought is for the, for the people that haven't gotten it yet, the account, we only have a couple of months, so you'll have, double the contribution because of where we are in the year. So that's my final thought. It's
using
exciting.
the link in the description below,
Yeah.
folks. Remember, let's help the children. Let's save a few dolphins.
Absolutely.
Right on. Thank you so much. I'll see you in a few minutes in the green room.
All right.
All right, it's time to bring in the extraordinaire producer, my buddy and partner in crime, Brady. Final thoughts before we close this thing down.
Final thoughts. This whole tax shelter thing, it feels like the beginning of the end of these kinds of necessary retirement things. It's just like a weird function of government sucking the blood out of you as it lets you live according to all the hoops you jump through. So it's almost like a necessary, not evil, but you can't get away. No matter, we think, ooh, look at us, we're into digital assets. We're giving the government the big middle one. No, we're still plugged in. We're doing exactly what they want because guess what? They figured out how to tax one way or another. They get you coming, they get you going. Knowing that, how can we get above it? And as we found out with TaxBit, pardon my French, but how do we arbitrage the crap out of it? Because if the IRS is just going to think of it as one thing, well, shit, let's work that to our benefit. So I think this whole tax shelter thing really does make you think, oh, don't send your fiat savings to your exchange. Send it to your IRA account. The problem now for myself is, hey, I want to buy Cardano, but they don't have it. So should I max out my 6K a year and then buy Cardano, or a mixture of both? So these conversations are good to have because they bring up a lot of what do we do nows. So very helpful, and they're definitely going to be coming back because we'll just have more and more questions, and they'll adapt to it. And I think this is the future of digital economies. I don't know. We're pointing in the right direction.
Right on. So there it is, folks. Thanks for tuning into Market Conversations. And remember, we're all learning, right? Let's be kind to each other. Let's just keep ourselves open to new possibilities. Let's not get locked into any one pattern. The most exciting thing that we can do is build value for ourselves and those around us. So until next time, everybody, Pura Vida.